Hi all, I'm making this video in response to a question on the Big Mike Trading Forum about the sell-off on the 26th of July 2014 and whether that was visual in the order flow and on the tools. So the question was if there was anything before the sell-off or during the sell-off that would tip us off to whether the sell-off was going to occur. Now I have to admit I wasn't watching the market that day, I had family around, but Richard kindly produced a video and posted it on the thread somewhere. There we go. So we're going to watch that in a minute. But first of all, let's just take a step back and look at the bigger picture and have a look at what we had in our pre-market prep that we produced before the open. So what we can see overall, we had this double top here at 1960. We had this range marked out here that we thought we might be able to fall back into. Then we discussed that yesterday. Sellers did push it back into the range, but they really failed to gain any traction. And then the bottom line, if we go down to the bottom, is that we're interested in shorts below 46.48, but with caution at 36, because we might not get down much further than that. So let's just have a look at the chart and have a look what did happen. So what we can see, we opened up here at 90.52.25. We came back in and stalled in that 46.48 area. We stalled at 47.25. Then we came back up to 48.75 before breaking down, and we finally reached 36.25. So that was about what we were expecting to happen if we broke through the 46.48 range. So before we consider the order flow, contextually, our expectation was that a downside break of that 46 to 48 area, and we did get to 36.25. So I always consider order flow in context, and that was the context basically. So let's get back to the video. Okay, so as we get into the video, first thing we see is that we open at 51.50 and we didn't tick above the open, so that in itself is a bearish start. Delta wise, we're fairly neutral, so we could just be building a range, 49.75 to 51.50 here. We can see that large trades have been predominantly on the sell side, but fairly neutral. Okay, so we just broke a tick below that range to 49.50. If we look now, 49.75 to 50.25, we're just building volume there. So let's just see what happens in this range. Okay, so we now have almost 9,000 contracts traded in that range, with plenty but not all of those being new short-term positions. So all things being equal, once this breaks, we should see some acceleration as one side of those gets stopped out. Now just a note, the first 15 minutes after the open can be quite fast and furious, so you might need to watch this video a few times. After 9:45, 10 a.m. Things tend to calm down a little bit more. Okay, so we're just at the top of the range, see what's happening, popping up there to 50.50. See what prints at 50.50. Okay, so 53 hits into the offer. Watch it on the way down now. Watch see what hits into 49.50. Okay, 9. Okay, offers are holding a little bit here at 49.75, 49.50. What can we hit in? 11.68 into 49.50 at the bid. We've ticked up through it. Okay, and then over 1,000 hitting the offer at 49.50. We can also see a bit more size coming in. 516 contracts printing 49.25. Okay, so now we can also see 14.82 sold into 19.49 and pushed through. So no sign of large buy orders, but lots of large sell orders. So 19.49 also now a line in the sand and potential entry point. Again, 48.50, 3,200 contracts traded. We did go back up to 49, just printed 74 contracts there. Again, it doesn't seem to want to tick up. Okay, so now we're pushing down. Push down to 47.50 with very little volume. So now watching to see if we come up back to one of our lines in the sand. So 48.50, our lowest line in the sand right now. Building a little volume at 47.50, 47.75. Watch what happens when we get up to 48.50 if we get there. Got some large buyers buying up 47.50, 47.75. Large buyer at 48. Large buyer at 48.25. Okay, the buyers need to get up. The buyers need to tick this up. The big guys. Okay, 48.50. Okay, look at the offer at 48.50. It seems quite low, 200 or 300, but it's definitely refreshing. No sellers hitting the bids yet, but offers definitely refreshing here. So some of those longs are going to be nervous. So can they get through it? No, somebody hit a 250 sell market order into 48.25, and we went through it. All right, so no longs would be nervous. Now, you could enter anyway here with a stop at say about 49. You could have entered when you saw the iceberg was going at 48.50, better price or a higher risk, or you could have entered once the 250 sell market order hit in. That's kind of a bit more confirmation, but worse price basically. Let's just see how this plays out. If you had entered like 48.25, you'd still be struggling for a scale out right now for a 4-tick scale. So now you wait basically. You need bidders to start pulling out of the way. You've got buyers stuck. Okay, we're at the bottom again. If you look at this, a lot of it's about feel. Does it feel like the sellers wanted to break that low then? It didn't. Look at the sellers at this low. You get down to that low and nothing hits into it. So if you're a breakout trader, that would not be an ideal scenario for a breakout. Okay, so now we're just rotating. It's still in the first 15 minutes, so it is still a bit of a fast and furious time to trade. We are rotating. We're building in a range of 47.50 to say 48.50. If we look at where our potential entry was, 48.50, that iceberg, we've been ticked through that once. If we were scaling out, we might have got a good scale, but right now I'd say if I was scaling out, I wouldn't have got a good scale. I'd be looking for 4 ticks. You could be looking to get at a break even here, as long as you've got a good trade location. Now the thing is, there's more trading here going on at the bottom than the top. So if you look at 47.75, 47.50, that's where the bulk of the volume's trading in this range. So, as well as our bias being low, we can also see that it likes trading the bottom more than it likes trading the top of this range. So let's just watch how it plays out. Again, nothing really to see right now. We do want to break. We do want it to accelerate on the break. We did have an entry, potentially around 48.50. You could have joined the iceberg. We're just seeing how this whole thing plays out right now. Okay, one thing to note, the overnight low, over on the left-hand column, we can see OL, which I'm going to hazard a guess is the recorder's shorthand for overnight low. So that's where we've stalled. We do expect a bit of a stall there. Remember, overall we want 46 to 48 to break. Okay, so as we go down, we can see it stall at 46.50. I didn't have another entry apart from that iceberg. So just watch this here. So this 46.50 where this size is printing, is this a potential reversal or a potential line in the sand for later on? We see some size on the way down as traded. Above us we can see a big step of 47.50. So again, what we're going to do now is look out for that 47.50 point if we get back up there, because again that's another potential entry point. Okay, so think about this. Is this directional trading here? Is this one-sided trading? Is one side in control? Just right now, this moment, is one side actually in control? Am I seeing 500 one side, 300 another? Or 600 one side, 200 another? Okay, so we're heading up, but is one side in control? See, we've got 16 hitting to 47.25, 19. Okay, back to 47.50, 63. Okay, we've got quite a few traded there, 280. Is it going to go through? No, it didn't go through. 374 traded, 47.50. Back to it. Can they get through it? 1, 5, 10. Okay, 33 traded. Nobody wants it. Nobody wants to buy into 47.50. Look out now. Watch the bids pull, and watch the offers stacking here. Right. Okay, so look at the bids. Look at the bids pulling there. That's what you want to see once you get in. Okay, so that was weakness. That was the bidders getting out of the way. We went up to 47.50. Couldn't really print it. It kept going back there. Couldn't print it, and now we fell down. The bidders were pulling out of the way. This is looking weaker now. Bidders don't want this. Now, at this point, you do have a good argument for continuation trade down. Like I say, it's 8 minutes in, or 9 minutes in. This is faster trading. If you aren't this fast, don't trade the first 15 minutes. Now, just because you get in based on order flow doesn't mean it's going to break straight away. It does mean that you feel 47.50, the order flow is confirming nobody wants to get into that, and that plays into overall bias. And now, watching our break. Okay, we're breaking this. Okay, there they go. That's stopping out that kind of fast action. That's when they start to bail. Okay, so now we're going to watch 46.50 above us, because basically on the way down it's kind of been looking for upside volume reference points. So we'll just presume it's going to continue to do the same thing. So is it going to get back up to 46.50? Okay, and we're breaking down again, so forget 46.50, nothing for us there. So now we've got a range potentially looking at 45 to 45.50, and we're getting some volume, well 45 and 45.50, nothing between. Okay, we have just down ticked it to 44.75. Okay, offers refreshing there. There's an iceberg there at 45.25, and we've got through it. 45.50. Holding again, couldn't trade above it. So we had a little iceberg there. That's good. We've got that range above us. Okay, we've got 1100 printed, 44.75 at the bid. Okay, this is a bit of a tug of war. Watch this now. This is a bit of a tug of war here. 44.50, 44.75. You can see it's kind of ticking up again below. Okay, it's ticked down, ticked back up again into it. A lot of trades going off. Okay, break downside. Okay, similar again. Look, 43.75, 44. Look at the trading there. 1600 on the bid, 1200 on the offer. Another little tug of war. Okay, still looking at above for 44.50 as a reference point. So a little tug of war down there, 43.75. Okay, we're back to 44.50. And nobody really wants it. 88 traded. So nobody wants to buy 44.50. Now watch this on the way down. Watch this. You'll replay this a few times. Watch the big size come in and watch the offers increase in size as we tick down. And also watch how much size is hitting into the bids. The bids are stepping up to a degree here. They take on some size, but look at the offers growing as we go down. And we've got another potential stopping point here, 43.25. Off bidders stepping up again. And we saw the same thing. The offers immediately stepped at the same price once we tick through it. So this is a strong move down. It's a different move down in the way that, the bidders weren't pulling out of the way, but the offers were really firming it up. Okay, so now we've got another range forming, 43 to 44. Large buyers are buying up to 43.75, but none buying into 44 evens. Now, a range after a drop is always more likely to break downside, so buying the top of the range is always a good play. Waiting for a specific order flow to confirm that. Okay, so watch the offers here at 43.75 and what trades into them. We get a few large sell orders after this. So you've got the iceberg at 43.75, then you'll see a few large sell orders, and that effectively kicks off a breakdown. Okay, so 9,000 going in. Offers staying fairly small but holding. And again, we've got some refreshing at 43.25. Here's our 1,100 contracts into 43.25 on the offer. And we break down again. Okay, so another small range. Delta off about 16,000 contracts, not a huge amount. We get an iceberg on the offer at 41.50, and then again here at 41.75. Now this is a trickier entry because the iceberg at 41.50 didn't hold. So are you going to join it because there's an iceberg at 41.75? And there's a lot of buyers, a lot of potential here for buyers being trapped. But you can see here there is a big effort on behalf of the bidders to hold this market. Look at all the big sell orders coming into this. Look at the size hitting into the bid. Icebergs on the bid here. The bidders are really trying to hold this. Bidders stepping up 3,000 contracts they've absorbed. 3,500 contracts they've absorbed. Let's just expand our range now. It's going to make the sellers a bit nervous, that one. But you can see there's a few big buyers coming in now as we come up to the top. We've got a little step up there at 42.25. We could get to 42, just one tick above our range, which is kind of normal to one tick above your range. 200 bid, 1,200 traded against that bid. Let's see how many more we trade. 1,300 trade. Look at the bid. The offer. Offer size is small there. Look at all that volume trading against that offer. 2,000. We're ticking out of it. They're not holding it, but they're bringing it straight down again afterwards. Again, so they've held the top of the range. So now all eyes on the bottom of the range, obviously. See what happens when we get there. Okay, so we just ticked through the 40.75 with the 3,500 trade previously. Seeing ahead to hold 40.50. If you're short now, you're standing up, shouting at your screen, go, 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 go. But you didn't get it. That was personal experience, that one. So if you're smart, you either bought the low of this range or sold the high of it. If you sold the low, you'd probably have gotten spooked out already. Either way, selling the high, buying the low of the range, you should have got a scale out by now. Okay, as we break down here, I want you to look at the pulling from the bids, size of the offers, adding to the offers, and the snapshot meter, and the large trades coming into the tape. So we're going to see a breakdown, and let's just watch them see that pulling, the bids. This is a breakdown. Now this is one of the times, look at all the red prints, this is one of the times you can consider a momentum trade for a breakout. That's a tough trade to take, and it works better on markets like crude with this sort of action. If you take it, you should not suffer any adverse move. It's a pure momentum trade, looking for the breakout and get benefit from other people's stops. Now, I would have taken a momentum trade there. That time, you'd have had to scratch it out. But effectively, if you replay that again, you see the bids pulling, you see the sellers piling in, down to the bottom of the range. You can take a breakout trade there. But what you can't do is you can't let that trade come back 4 ticks. You've got to have the momentum, and the momentum has to keep going. So we didn't see that breakout there, but if you're looking at breakout trades using order flow and with other instruments, when you see that kind of action, that is usually when the thing's going to break out. Okay, so we're starting to see some more sellers coming in. Look at the selling. Okay, here they come, here they come. So that was the actual breakout. And again, we've broken out. Now we can start to see we're building volume places, where we're going to build the volume, where we're going to have a short-term range. Just keeping on going down. We're actually looking below at 36. That's the LIS. I presume that stands for line in the sand, which is one of the terms we tend to use a lot. That's the point at which we think this is going to go down. So we can watch it building some volume here, 38.25 to 38.75. Just this alone, you can trade. You can just watch it build this volume, and you can say short 38.75. We've got a big iceberg there at 38.50, but it's a pretty short range to trade, a 3-tick range, and you couldn't really scale out. So it's not really my kind of thing. But as soon as you see that volume node, that is where you kind of expect to stay within that node if you're going to move down. So if you do trade 38.75, you're looking at 39.50 where we've got the low volume above, as you really don't want to go up past there. And we push down and we're building volume again. Right now, we just built 2 lines in the sand. We've got the 38.25 to 38.75 range, 36.50 to 37.25 range. And the pattern on the way down was to hold these lines in the sand. So now we wouldn't expect actually to get to that upper line in the sand. And of course, anyone that's got a chart will tell you that 36.25 was the low of the move. So as this plays out, I want you to watch this and maybe look at this action and then compare it with what you saw on the way down. So as you'll see this, delta is off a fair amount right now. It's off over 20,000 contracts. As you see this play out, you'll see delta recover a little bit, and you'll see it break out from this lower distribution, the lower box, into the upper rectangle. Sorry, he's moving his dome around there. So you'll see it move into the upper rectangle, and you see it kind of mill around and mill around and mill around. I wouldn't trade in this area. I don't trade reversals. I would trade continuations. I'd be a bit reticent. Once I've seen delta recover by 10,000 contracts, I would no longer go short. I would want really at this point 39.25 to break out upside and then come down to 39.25 to take a long trade. I wouldn't take a long trade here, but I'm going to just let this play out now to the end of the recording. I want to thank you. Thanks to the guys that made the recording, or the guy that made the recording, and thanks to the guys on BMT that asked the question. It was quite an interesting day. And I know it was very fast, and I was trying to explain it as it was happening, and you might need a few watches, but I do hope it was useful for you. So I'm going to sign off now, but I will leave the video running. Thanks. Bye.